Yo, welcome to Forex.Today. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's start with the headline update. Oil prices extend gains. Russian attacks U.S. crude stocks in focus. Have to do the whole thing over. Hang on. Reload. Oil prices extend gains. Russian attacks U.S. crude stocks in focus. Gold consolidates below record highs as Fed caution and U.S. dollar strength weigh.
Aster price forecast, Aster skyrockets as whales, DeFi TVL fuel rally.
U.S. dollar extends rise amid Fed Chair Powell comments.
Mexico, first half month inflation below expectations, 0.9%. In September, actual, 0.18%.
Mexico first half month core inflation registered at 0.22% above expectations, 0.2% in September. Crypto today, Bitcoin, Ethereum, XRP pari losses as whale selling continues.
Euro, JOT US dollar dives further on downbeat business climate data. A firmer US dollar. Nasdaq 100 short-term bullish trend remains intact above 24,535 key support.
FTSE 100 modestly lower in cautious trade.
Yes, and the major move, in particular for the dollar, is related to Powell comments yesterday that kind of said to the market, you can't bet on 3 cuts. We may not. It's meeting by meeting. And so now we have a pricing out of what was priced in. How long is that going to last? I don't know. But I tend to not like to trade this way of, oh, he said this, buy everything. Oh, he said that, sell everything. I don't really like it. So maybe it's different constituencies. Those that didn't buy it last week are now selling it, selling euro dollar this week or something. Maybe. Or maybe it's short-term profit taking where last week people, let's say, were front-running euro dollar long and then the Fed cut and then they took some profit and we're in that kind of mode now and then we get back onto the longer-term trend. But I don't like the he said, she said, Powell said this, buy it. Powell said that, sell it. What I prefer is let's just get it down to its basic core essence. The Fed has started a policy of normalizing interest rates. Cool. And we'll go from there. And that hasn't changed. All right, so anyways, let's get on with it. Let's do our macro. Hey, did you complete the survey? What's the best time frame for these? Should I go an hour? Should I go a half hour? 15 minutes? 5 minutes? Did you like yesterday's 5 minutes? Was it yesterday? No, 2 days ago. I did the whole thing in about 10 minutes. You want the quick and dirty every day, or do you want the long, esoteric babble? What is it that you want? Remember, I serve you. I am a humble servant. So, give me feedback. How can I serve you? Sorry, I've been up for hours and hours and hours. I'm already exhausted. All right. So we got to do our macro. Okay, yields are a little too high, oil's a little too high, gold is right where it should be. Stock market, yeah, I'd like to see a bit of a rally come back here today. I'd like to see dollar fall, and I'd like to see Bitcoin rise and all that kind of stuff. Now, what I want and what the market's going to do are two different things. And so what I want might not take place for a couple of weeks. And my theory on that is we get into a new quarter, we start new earnings season, and we're hot to go HOTTOGO. But if we get a lower GDP and a higher inflation, okay, or lower GDP benign, kind of like has as it's been, those things could be very good. For example, a flat PCE but a low GDP would signal the market that the Fed will have to do 3 this year. Boom! It's all good. Okay. A high PCE and low GDP, which is different from what I said. The other one was sort of flat PCE, low GDP. So if we have low GDP, high PCE, probably catch a bid on gold. Cool. And in general, a Fed cutting interest rates and a government cutting taxes should be good, you'd think, right? I don't know. What's your opinion? Okay. So let's do something different today. Oh, no. I ain't going out like no punk bitch. Get used to one style, and I might switch. What is that from? I don't even remember. I don't even remember where that came from. Oh my God. 90s flashback. Huh? 90s flashback. Sorry. Sorry about that. Sorry. Sorry. You killed my auntie. Sorry. All right. So we're going to, instead of doing pattern recognition, let's do statistical analysis. All right. Euro dollar. Quite flat, slightly bullish. Base case scenario, 18.5. Best case scenario, 119. Over the next week. Wow, that's not much. No. Well, look how flat it's been. And look at the standard deviation, how tight it is. So we're tunneling, waiting for a breakout. Hey, nothing's happened for 3 or 4 days. What do you expect? Bitcoin, Bitcoin. Now, Bitcoin's got the volleyball ball. That can be good. That can be bad, depending on how you're playing it. Bitcoin with the stop at break even's all good. All right, so let's take a look statistically. Oh, look at that. Oh, we were way up and then we're all the way back and we get to the mean price. And we have a negative slope with look at the size of this standard deviation. So a lot of vol. And this is pointing down. Oh, look at that, actually. Today's the 24th, right? Ooh, it hasn't updated for a couple of days. You son of a... Is it only that, or was it everything? Was it Euro too? Well, hell's bells. Let's go back. No, that's fine. So, all right. Well, then let's go back to the normal process. Let's go back to pattern recognition. All right, all right, all right. So what are we doing? Some biddy? All right, some biddy. I want to start longer term. Yeah, we're still thinking possible to bring it all the way down to 101. Not remember, none of this is prediction. It's pattern. So what does the pattern mean? Yeah, that's all. How do you trade this pattern? Well, like a down channel is bearish. Okay, we kicked off the resistance, so the next leg could be down if this pattern's going to continue. That's all. It's an if then. If this pattern's going to continue, this gets us down to about 108. It's pretty tight. On the longer term, it's interesting because this ABCD pattern, this right, this type of pattern is not only saying, if it makes a lower low, take profit, but in fact, it's the potential for an inverse head and shoulders. So even if we make a lower low, which is usually quite bearish, right? Like, let's do like a normal situation. Okay, let's do a normal situation. Lower low, lower high, lower low. So what do you expect now? Lower high, lower low. Cool. This is suggesting something quite different. That. Cool. I'm into that. We're a long ways away from that happening. It's still an if then. It has to make the charge down to 100. Is that going to happen today? Well, here it is on a daily. Look at this. Right around 100. That's nice. But what's going on now? It's trying to get back up today. So support, 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 support. So we're trying to get a higher high, higher low, higher high. How does it fit here? Well, the problem is on that 4 hour, we're at the resistance. So if this fails, then we're doing this. If this works, then this is probably going to fib the other way. So look, none of this is prediction. So it's always got to be if then. So if this breaks to the upside, it becomes bullish, right? Therefore, this ends up being the pattern on the higher time frame because it becomes a giddy up scenario. Huh? And this part of that potential emerging pattern fails. But you don't want a pattern that's already formed, do you? We're like on an inverse head and shoulders. Okay. Do you want to be informed here? No. Wouldn't it be cool if you were informed here or here? Yeah, that's what we're trying to do. Okay. So this is after the fact. We're trying to say, hey, this might be a potential. Why don't you plot this on your daily Bitcoin chart and take a sniff? What do you think? And I'm regretting the sweater vest this morning. All right. I want up. Give me some up. And we're looking at all the time frames on the 10-year T-note. And guess what we see? It's strength. So I'm happy with that, but that's a threat. So my plan is maybe here, somewhere in that zone. Take it north. That looks like buck 11 and a half or buck 12. Testing 12 on our way to 16 or higher. All right. Well, it's going to be patience, isn't it? And that's daily. So it could be down all the way to Friday and then up all next week. Cool. Well, patience is a virtue. Gold. I like gold. I own gold. I get it. I got it. I know it's good. My gold is tight. All right. 4 hour up, hourly up, daily up, 30 minutes sideways. 15. Yep. It looks like it might try on the open. You're probably 90 minutes late. You know, I teach you how to trade gold properly at TRADARS and Investor Boot Camp. I've done it a million times, and you typically would be late by now. I mean, dude, it's like the middle of the afternoon in London, and you're just trading gold now. Well, Wayne, I live in Omaha, Nebraska. Well, get up earlier. Huh? When you wake up in the morning and look at that alarm clock, it better start with a 4, not a 7 or an 8. Wayne, I want to become filthy, stinking rich, but I'm not willing to get up early. Oh, well, why don't you buy my training course on how to sleep in and get rich? It's $1,000. Yeah, sign up for my sleep in and get rich quick seminar. You're going to love it. Yeah. Yeah, and it'll be a seminar on how to sell poor people seminars on how to get rich without working hard. Dude, that's brutal. I know, right? So, anyways, gold's good, generally speaking, but things can and do change. Okay, so what should we do on S&P 500 today? Does it look bullish to you? Does it look bearish to you? Does it look sideways? Does it look like it's reversing? Well, you should have a meeting with your intern. Hey, chart bitch, get over here. Tell me what you think about the S&P 500 now. Is it up? Is it down? Is it sideways? Is it reversing down? Is it reversing up? Oh, and by the way, I want you to answer all those questions on 5 different time frames and prove your work. Okay? And survey says nothing. There ain't nothing. There ain't nothing but a hound dog. Yeah. Nothing. Let's see. Oh, I just see the chat here. Hang on. I don't have the proper chat going. Let me open up a different window. Oh, it's not that page. This page? Hang on. I can't quite see the chat. Okay. Now I see the chat. Okay. Let me answer some questions. Okay. Where did I see that? Somebody asked me a question about RSI. Now I don't even see it. Let's see. Oh, do I utilize RSI strategies? I studied RSI inside and out. Okay. I know a lot about RSI. And at the same time, I was doing CCI, MACD, stochastics, ADX, and a few other things. This was probably 22 years ago, 23 years ago. And what I concluded is they're mostly different variations of the same thing. Okay? So you can buy 27 different types of Mustangs but they're all Mustangs. Some are $40,000 Mustangs, some are $140,000 Mustangs, but at the end of the day, it's a Mustang. All right, so in that case, what I found, and in fact, I used 3 RSIs on top of each other and I tweaked the settings so that they would try to show me RSI on 3 different charts at the same time. Well, Richard says, so RSI is trying to capture strength of trend. I hear stuff like that, and I'm not poo-pooing on you, but I'm like, that doesn't make any sense. That when somebody says that, and by the way, everybody says stuff like that, right? Every book says that. What it tells me is they don't understand the math. So they're using an analogy to say, well, it just tells you what the trend is. No, it doesn't. What do you think it's, right? And I'm not picking on you either, Richard, right? But it's not like it's AI analyzing a data set and then telling you how strong the trend is. That's not what it's doing at all, right? So anyway, so here's what I found. I studied the heck out of it, and it's fine. I chose stochastics because I found that it was easier to tweak the settings on stochastics to get stochastics to measure what I wanted it to measure, how I wanted to measure. And RSI confirming or denying, there wasn't enough evidence to support that it was a benefit, you see? So I'm like, I had to make a choice, use RSI or use stochastics. The other stuff, same thing, but somehow I got to RSI and stochastics, right? And I got rid of the other stuff, but I did look at it. And I made a choice. I want stochastics. Now, the math of the stochastics and the math of the RSI are not completely dissimilar. They're kind of doing the same thing. Kind of, yes, kind of no, but whatever. You kind of get the same result. And then I studied the math of MACD, and it's way different. So when looking at the math, and actually I bought an old written course from the 1980s by Gerald Appel, right, on how to use MACD. And a lot of the stuff that I saw out there with MACD is stuff that Gerald Appel, the inventor of MACD, didn't actually use. He didn't do stuff. It's sort of like John Bollinger. I remember I met him at a conference a long time ago, and like decades ago, but used to speak a lot of conferences, and everyone used Bollinger Bands. And there were all these gurus that were teaching you Bollinger Band trading strategies. John Bollinger himself is out there saying, you know what? I never said that. I never found that to work. That's not always true. But gurus were selling it like crazy. So anyway, what I found is the way I used MACD and the way I used stochastics was significantly different than just putting MACD and putting stochastics on your chart. I tweaked them to do a particular job. And to do that, I had to already have a mindset. And you move away from, you traded it because MACD told you to suddenly you're like, hey, is now a good time? What does MACD say? Oh, I might be wrong on my time, which is way different thought process, right? And so you have to understand what the indicator's doing, and to understand that, you should understand at least the basics of the math, and therefore you would never say RSI is trying to capture the strength of the trend, like stochastics is measuring candles' ability to make higher highs and higher lows, or lower highs and lower lows. It's not necessarily telling you anything but that, but you should know. MACD is telling you the angle and separation between the 2155, the way I have it set up. Now, I think it's like 1226 is the standard, something like that. What kind of knucklehead uses those settings? You trade the 1226? Is that what you're doing? You're like, no, I don't use the 12 and 26 moving average. Then why are you using MACD? I don't know. I read in the book I should use MACD. Well, you're now taking quote unquote signals from moving averages you don't even analyze. So there's no congruency in the logic, you see? So your logic is flawed. Well, yeah, that's closer to the truth, Richard. Yeah, but you see, like, I want you to have the power of knowledge. And most gurus are maybe not that knowledgeable. I don't know. It's not my job to talk down to people. I don't know what they do. But you hear things out there and you're like, wow, this guy doesn't actually know. Right? Like when you know the math and somebody else is talking about the indicator and you're like scratching your head, like, well, that's not what the math is doing. Right? You're like, okay, so like again, the what is the motto for Harvard? We have a shield and it says Veritas on it. Okay? And it's the truth. Okay? The power that you have is from the truth, and the truth is knowledge. You simply know stuff that other people don't know. You're illuminated in a world of darkness. Darkness being ignorance, right? And so when I got my first degree, they actually gave me a lamp. I have Veritas on my ring. Just noticed spacing the wrong way. Shame. Okay, there we go. Veritas, the truth through knowledge. You're illuminated through knowledge. So some people use MACD because they read it in a book or some guru on YouTube said it. Then you're like, well, do you know what the math does? No, I have no idea. Well, that's ignorance, isn't it? So why did you buy it? The MACD is going up? Question mark? Right. So anyways, I take great pride in trying to teach as much as possible so that you can actually make decisions, right? So now Richard might say, well, it kind of captures the strength of the trend, but it's really more closely to the volatility inside the trend. Yeah. Okay. And it also, wouldn't it depend, Richard, if you're looking at a daily chart versus a 5-minute chart? So what is it measuring there? One might be long-term trend and the other one might be short-term price. Well, that my whole book breaks down that logic. Okay. But again, I just want you to say, well, I use RSI. Why do you use RSI? Well, let me tell you. Versus, I don't know. Okay. So again, I'm not picking, but to the person that asked about RSI, no, but I could. Do I use RSI strategies? No, but I could. But like, if I wanted something similar, I would just go to the standard FX Bootcamp chart that I've been using for 1,000 years. This uses MACD and stochastics. So you're asking me about RSI. I'm just going to substitute that with stochastics. What does it tell me? What about EMA crosses? Well, of course. Hey, by the way, let me sell you something. Let me get rich quick. Let me get rich. At investorbootcamp.com, there's 100 hours of training courses for $88 a year. 100 hours for $88. Yeah, please go to investorbootcamp.com, sign up so I can buy a yellow Lamborghini. I need it. Please give me your $88. Yeah. Whatever. So if you want knowledge, there it is. There's nothing stopping you, right? Cool. All right, what does this stochastic say? Up, down, or sideways? So it says, so I rely more on those than RSI. I'm using it instead of RSI, but RSI would tell you pretty much the same thing, is what I'm telling you. Okay, this zone here. Okay, let me delete that. Let me do that. Okay, this zone here means it's overbought. No, see that's the mistake. People think oscillators are buy here, sell there, buy here, sell there. Those people, by the way, if you've taken a training course from a guru that teaches you stuff like that, they actually don't know what they're talking about. It's not even the right mindset. So, what does this mean here? It means everybody is buying. Okay? It's overbought because everybody's buying it. What do you expect? Look, it was overbought here. Look what happened. Just kept going and going and going and going and going. So right off the bat, gurus that say sell here, buy here, sell here, buy here, that's not a complete knowledge of what's going on. It's very, very incomplete. Okay. It's not always wrong, but it's sometimes wrong, which means it's not reliable. Okay. Now, we're going further out. There's more time here, and it changes a lot, doesn't it? All right. Now, the most important thing on this chart is this. Okay, it's this cross right here. So the question is, do I use moving averages? Okay, that is the day, or actually the time, the 4-hour, in which this market became bullish. Cool. Cool. So what about all this other stuff? It's not very helpful. Because you should be using things like price action. Okay, so there's a buy. There's a buy, right? There's, okay. So what this is now telling you is in here, there was a significant decrease in buying. Okay. Not increase in selling, decrease in buying. Think of it as maybe bulls taking some profit. Okay. Then when you get down around the line, it's very, very sold. in that time period. Okay. And typically, what you want to do is you want to look for situations like this one here where it no longer is so bearish. There's no longer massive profit taking. So it's not the oversold part that matters. It's not the right. It's not the overbought part that matters. That's where gurus get it wrong. Okay. Here is the opportunity for you to start thinking about getting long. Now, is the timing perfect? No. But what is this telling you? What is the math doing? Well, it's showing you that right here, prices stopped making lower lows. Okay? So tell me, is no are nowhere is no lower lows bearish? Hmm? If we stopped making lower lows, is that bearish? All right, I'm going to assume we have a lag here. No, it's not bearish. It's not necessarily bullish. What's bullish? Higher highs with higher lows. So that appears a bit later, doesn't it? So essentially, this move is popping you into a range, and then suddenly higher highs and higher lows pull it into an overbought zone. So would you sell that? Never in a million years. Okay. But a guru would probably tell you that. Okay. So here's what I discovered. Before I even look at stochastics, I need to measure the moving averages. The more important thing here was the moving averages and all of this. Okay. Great. So then I'm like, well, I need something like stochastics, but I need it to measure the moving averages. So I did my research and I found out there's an indicator that uses moving averages. And I'm like, cool. I found the standardized settings didn't do much for me. By then I was using the 20 and 60 moving averages, so I plotted those in. Now I use the 2155. The orange line's 21, blue line's 55. So if you look at my MACD, 2155 over 8 periods, measure the distance, the angle and separation between the 2155. So I can do two things. I can plot the MACD on my chart without actually putting the MACD in. I can draw MACD with my mind. Or I could trade with just MACD and not even look at a price chart. There's no difference. There's no difference. If you understand one, you understand the other. Okay? So let me tell you something about the market right now. This is important if you're going to understand how to read your stochastics. So going back to the original question, about using stochastics or RSI, dude, it doesn't matter if you don't even know what the market's doing. It doesn't matter if you use RSI or Stokes. You're like, Wayne, I can't figure out Stokes, but I love RSI. Then use it. Most people can't even make a decision on being a bull or a bear. But reverting to what RSI tells you is just another acknowledgement you don't know what's going on. But if you know how to read the market, then the RSI or stochastics or ADX or something similar will help you make a similar decision. Doesn't matter. RSI or stochastic, doesn't matter. I can kill it either way. So now going to MACD, what do I see here? It's bullish. Not a problem. Okay? And what's happening now? We're consolidating. So we're bullish and conservative, we'll put. Okay? That's it. Okay? If RSI is falling, it'll probably drag this down a little bit. And then RSI turns back up the other way, and then we'll probably head this way, and then I'm bullish and aggressive again. I don't need the moving averages. I can see them. Because I know how MACD works. So if you understand how MACD works, you don't need to see the chart. But if you can see the chart, you don't need MACD because you can see it. What's the difference? Couldn't care less. So what do I see here? We're bullish, and I'm waiting to buy, but not necessarily right this second or on this time frame anyways. And yeah, now I look at the price and I'm like, yeah, that makes sense. We're definitely bullish and I definitely want to buy, but not right now. So if I was using moving averages, I would look at this and say, oh, it's definitely bullish, but the 5/8 is pointing down, so it's a bit early. But if I wanted to make a decision sooner than later, I could just drop into a 15-minute chart, wait for the New Yorker to open, and I can wait until I feel like getting long and strong. Front running the inevitable on the 4-hour. Done. Oh, but there's no MACD. Oh, yeah, there is. But I could see all of that just by looking at this. And would that similar action work on a 15-minute chart? Yeah. Yeah. So let me show you. Okay. There's a 21.55 cross up. It became bullish. 21.55. Oops. Cross down. That's bearish. Okay. Cross. Cross. Okay. Okay. You ready? So I said here, bearish. I said here, bullish. Okay. I said here, bearish. Here, bullish. Right there. This is a 15-minute chart. Okay. Here we are, bearish. And where are we now? Yeah. Slight bullish. Just slight. Mark it here. Mark it there. All right. Why does this matter? Well, what if this whole entire time I made all my decisions on a 4-hour chart? of buying or selling. Okay? I'm a buyer or a seller. I'm bullish or bearish. I'm risk on, I'm risk off. What if I made all those decisions on the 4-hour? And now I'm looking at MACD on a 15-minute chart. Well, I can take profit here. I can go along here. I can take profit here. I can go along here. I can take profit here. And I can go along here. What am I doing? I'm buying at the 4-hour 21 EMA, which I can see on my 15-minute chart. Oh my God. Oh my God. Oh my God. It's so good. Oh, it's so good. Ugh. Huh? I'm smoking hot like fire. When I turn, you desire. I'm fresher than you, because you white. I ain't lying. I ain't dying. Up to number 1 is where I'm flying. Yeah. Dude. So I hope that was amazing. I'm spent. Look, just like that. You ask a good question and you get a detailed answer. Yeah. And that's what I try to do. Is I want to give you the truth, right? Veritas. The truth is knowledge. Okay. Well, a head and shoulders. Oh, reversal. No. Now, see, you're being overly tactical. So, one of the points I was trying to make here is strategic and tactical Forex trading. That's the name of my book. So, on a 4-hour, I'm like, I'm a bull. Done. Strategy is set. I'm a bull. Great. So, what do I do in bearish situations? Not trade. What do I do in bullish situations on a 15-minute chart? I buy it. So, just looking at this last couple of days, there's a buys, there's a buy, here's another buy, and I'm going to let it run forever. $15-minute, and I could trade the whole thing using nothing but MACD. One indicator. I don't need your RSI. I don't need my stochastics. I don't need candlesticks. I don't need the moving averages. I would love to have some pivot points, because this doesn't tell me where to get out. It only tells me when this 15-minute chart is aligned with my 4-hour bias. You understand that? Well, Andreas, we knew that drop was coming. Dude, I made a boatload of money on that drop. So that's good. So the way you asked the way you phrased the question means you didn't know, and you still don't know what is likely. And I can fix all that. You don't ask a YouTube guru. Okay, I have historical data that can help you know what is likely and what is unlikely. We call that quantitative analysis, right? And so I don't know what the future is going to be. Okay. but I definitely know what the past is. So we can just pick something like that. And that's what I think will happen. Something like this for USD CAD this year. Okay. Cool. So you're like, Wayne, I don't know how to read this. Well, somewhere around here, it's going to fall. Oh, look, it fell. Somewhere around here, it can kind of rise, and it can keep doing it to about here. And then somewhere around September, October, we move this way. So my general feeling or my general analysis is a shape of USD CAD that looks like this. So what actually happened? Generally down, generally up, okay? And somewhere soon we should probably resume a generally down. Huh, well, hell's bells. That's pretty good. Okay? But what I mean is, and I just picked this US kitty CAD just randomly, right? We already knew that around March and April there'd be a big drop. That's what it says. This is based on 20 years of data, Andres. So how could you use something like this? Well, this is where you take some profit, and this is where you buy it all back. Which I did, by the way. Yeah, baby. So I don't know if you had a general idea of what happened in the past. You can tell me what you think is likely to happen for USD CAD. And then say, well, this year is different than the last. And how is it different? How might that play out in the markets? How might that play out in monetary or central banking policy? And what could threaten your bias for this year based on what usually happens and what might happen this year, like geopolitics, for example. Okay. And now you're making much better decisions and logic than listening to a guru tell you their opinion of up or down. I don't have any opinions. I do manage endowments for charity. I do manage a group that manages my money for me. That account, we got it. Where are we now? $104,000. Not bad. And so we make real decisions, and to make real decisions, you have to understand what is normal, because it helps you understand probability. So, like, can you play blackjack without knowing the basic rules of blackjack? Probably not, because it's very much probability. Okay? If you have a jack queen, you probably don't hit. Why? Well, only one card there's only 4 cards, assuming you haven't seen an ace. There's only 4 cards out of in that deck that can help you, and everything else is going to hurt you. So you probably shouldn't do it. So there's that, like what normally works. That's what probability is. What's normal? What's the normal distribution of outcomes? And then once you got that settled, and you know where you are in the cycle, the annual cycle of USD CAD, then you could say, well, what's unique about this year that may be different than the last 5 years and the last 20 years? And how would that play out? Would it be pro-Canadian dollar? Would it be anti-Canadian dollar? What's their economy like? What's their monetary policy like? What's their fiscal policy like? What are the commodities likely to do, and would that benefit or hurt Canada? What about geopolitics? And now you're putting together a pretty comprehensive point of view for trading USD CAD. But like, if you don't even know how USD CAD moves, you're not going to be successful. You're just not. You're always going to be late, or look, you made a lot of money because it's been going up for months, and all of a sudden it's falling and you keep buying it. And then it's been falling for 3 months, so you start selling it, and all of a sudden it goes up for 3 months. And you're like, as soon as you come around and trade what has been working in the past, suddenly it doesn't work anymore. Well, maybe you should look 3-4 months in advance, or you should be able to say, well, week 24 looks interesting for buying, and maybe up here I should take some profit. Yeah, I like that line. Week 24, okay? And maybe here, maybe you like it this way. You start accumulating, and this is when you start taking your profit. Huh? Accumulation, distribution. Cool. Well, if you don't know that, you don't have a chance. You're not being competitive in a competitive sport. Huh? Time to take it serious. Get in the ring. Time to compete, y'all. And why is that, Marco? So, one thing you might want to focus on, and I'm going to release a new tool very, very soon to help you with this, Marco, is understanding currency correlation quantitatively, not just subjectively. But let me answer it this way. There's an a cycle for things like the dollar and a cycle for things like the yen that are totally logical and intelligent. And you could say, like, when do retail buyers, so the store, place orders for items that will be on their shelf for Christmas? Christmas is on the calendar. It's seasonal. Every year at the same time, we're going to have Christmas. And so retail sellers, the stores, say, well, we like to start doing Christmas in November. As soon as Halloween is over, we like to do Christmas. Great. So when do the products need to arrive? Middle of October. Okay. How long does it take to manufacture all these products and put them in boxes and get them to the store by the middle of October? Oh my God. Well, you need 2 weeks to ship it. You need 2 weeks to make it. So that's at least a month. Okay. And all of a sudden you start to see orders get placed in late summer. Cool. So guess what? Money starts to flow, Marco. If you want a product on your shelf at Christmas time, guess what? You got to place the order and pay for it in September. So suddenly you have all this flow of capital leaving the United States in exchange to receive products to sell at Christmas time. So the foreign exchange here is money leaving the United States, and eventually products being imported into the United States, right? Money out, product in. So guess what happens around September, October, and November when these orders are being placed and paid for? Dollars leaving the United States. So if you're buying products to sell, you're selling the dollar for products. You're selling the dollar, you're buying products. Dollar weakens. Why? Christmas. Now, what I'm trying to say is there's an underlying logic. It's not magic. There's a reason. Okay? There's a reason why money crosses a border. It's not magic. It's not a video game. Forex is not Fortnite. And it always comes down, Marco, to human behavior, human needs. There's a scarcity. Okay? So I know when I'm going to buy oil. Now, I can prove it based on past performance. Now, that doesn't predict future results. I just know when to be buying oil and when not to be buying oil. Because I have actually, we have 20 years of data, but at one point I had 50 years of data, but that 50 years of data was almost 20 years ago. So, I've been doing this a very long time. So really, in my mind, I have 70 years of oil inventory data and oil pricing data. I also track OPEC. I track EIA. I track all this stuff, right? And so I know when I intend to buy. But even more than that, I know how the oil industry works. So it turns out, Marco, there's seasonality in the oil refinery business. So if you want to trade oil, yes, you're going to need to know international geopolitics. Yes, you're going to need to know macroeconomics to analyze supply and demand. Okay? Yes. But you also need to know how the oil refinery industry works. You don't know that, you're an incomplete oil trader. And you're not going to be very good compared to someone that has the complete picture. And let me tell you why. There's only one buyer of raw crude oil like WTI or Brent in the world. There's only one kind of buyer. It's not you. It's not your neighbor. It's not truck drivers. It's not airplanes. What is it? It's oil refineries. So now I understand there's a seasonality to gasoline demand. There's a seasonality to jet fuel demand. There's a seasonality for tar and plastic and all this kind of stuff. You see? And when you understand the oil refinery business, and I actually teach it one of those courses at Investor Boot Camp for $88, you would get this knowledge and a whole bunch more. This is just on oil refineries. So I'll teach you how jet fuel is made. Because if you don't know that, how could you be a good oil trader? Oh, my MACD and my RSI. Whatever, bro. Okay? So now it's like, wait, if you understand the oil refinery business, you can be ready, willing, and able to trade those business cycles based on normal human activity. And then when things are abnormal, you would understand the abnormality. Because if you don't understand normal, you don't understand abnormal. They're all the same to you, which means you're in a world of darkness. You're not illuminated, and you don't know the truth because you have no knowledge. You know what? TRADARS will fix that. And you'll stop trading like an amateur and